Welcome back. Let's talk to Rahul Khanna. He's an FX strategist for TraderMade. Morning to you, Rahul.
Morning.
Let's talk about the New Zealand dollar. You've got a 3-month chart here. And where's this trading?
So this New Zealand trade weight index trades on Deutsche Börse. Market produces their trade weighted index, and they produce it for all the currencies. So if fund managers or currency managers wants to take a view, you can have this as a tradable product.
Understood. So why did you choose this chart to talk about today?
I chose this chart is because, again, Royal Bank of New Zealand is having their rate decision meeting today.
Yep.
Around 9. What we've seen is recently the New Zealand dollar had a rally, but all of a sudden, the data disappointed. So first set of data that disappointed was CPI. We were expecting it to come around 2.1%, but it missed expectation, came in around 1.7%. GDP was also poor, and unemployment rate was also poor. What was unexpected was GDP numbers and inflation numbers from what Royal Bank of New Zealand projected. So that's why we have seen sort of a correction recently in New Zealand trade weighted index, and New Zealand had lost its sort of a status of being really strong. Now again, this meeting, most of the things we think is priced in, which is that RBNZ is going to be dovish in their view about the economy. Previously, they were dovish as well, but market didn't buy their dovishness, and sort of they lost a bit of credibility, and we saw that rally back in after the last meeting. Coming back to this meeting, this is now priced in, but what is crucial is now if RBNZ goes and lowers their projection for inflation and possibly about growth and sounds a bit dovish, then market will believe their story a bit more because they have data to back what they're saying. And given that we've seen from RBA or other banks where they've been sort of relatively less dovish,
yep,
we can see New Zealand go further lower. In terms of New Zealand dollar, I think we might go to 72 area. On this one we can go back to 145 area if they are dovish. We don't expect RBNZ to be hawkish, but let's say in an unlikely scenario, just like we've seen with RBA being a bit positive on the economy, could lead to New Zealand having a short-term bounce. But at the moment, the way it sits, it looks like there is some New Zealand weakness about to come over the coming days, especially if RBNZ follows what market is expecting, because I think market is still waiting for confirmation from Royal Bank of New Zealand.
Well, it's clear that on the charts,
yes,
okay, which is the sort of supply and demand sitting on an absolute critical juncture, waiting for a decision from the central bank.
Yes. So yeah, as you can see, I think the level is already broken. So market is already sort of bearish because they're thinking very unlikely that Royal Bank of New Zealand is not gonna be dovish, because they were dovish when the data was supportive last time. This time the data is sort of in their favor, and Royal Bank of New Zealand always said that they don't like a higher Kiwi. And as we can see, that Kiwi, if you look at a longer sort of 3-month chart even, has been sort of quite up. So I think they will also talk about Kiwi strength being a problem for the economy.
Yep.
They can already cite what's happened on the economy being dependent on what's happened in New Zealand up till now. And I think they wouldn't want New Zealand at these levels. So I think there's scope for New Zealand to correct further.
We're a seller for choice. Okay, Rahul Khanna, FX strategist for TraderMade. Thank you very much for your time.